Hello and good Monday everyone, welcome to the Forex Board Trading Academy. Today we will be looking at the Canadian dollar against the Swiss franc. But before we get started, I would like to remind you that information in this video is for educational purpose only, should not be considered as a financial advice. If you still haven't subscribed to our channel, do it right away, and don't forget to click the notification bell to follow all the videos we do every single day. So let's see what is happening with the Canadian Swiss franc currency pair. Well, this is a daily time frame, as you can see right there at the top, and the first thing I did is use the downtrend trend line. And what did happen back on the 9th of November is the break above the uptrend trend line. So there were multiple breakouts. In fact, we had a previously made high. There was a resistance area near 0.7000 psychological level. You can see there were two bounces, but then we had a daily break and close above this resistance area. Along with it, there was a break and close above the trend line, and there was a break and close above the 200 simple moving average. So multiple breakouts suggesting that the trend is about to turn bullish or become more bullish because it's already producing higher highs and higher lows. The previously made low obviously is this support. So this will invalidate the bullish outlook completely because we need to produce a new lower low and then it most likely will become bearish. Another important support area that I have spotted is located between 0.6892 and 0.6872. This is basically a 20 pip gap for this support. Why this support is important is because it's confirmed by two fips. First, I have applied fips to this wave to the upside. Now you might ask why I have used this low instead of this low. Well, I did look at the weekly chart, and from what we can see, there was no breakout below this level. So there was a spike only produced, and I considered that as the initial low. So this is the reason I have used it. Now 61.8 fips. We see that it has been acting as the support multiple times, and the last time was yet again just before the break above the moving average, the break above the resistance area, and the break above the trend line. And this was a clean rejection of this 61.8 fips, after which price went up and now correcting down. Another fips is I have used this low, so basically the very last wave to the upside, applied fips to that, and we see that 88.6 fips located at 0.6892 has been rejected extremely precisely. So there was a precise rejection. And finally, the very important thing is that we are forming a golden cross. Well, not forming, it has been formed, which means that the 50 moving average is crossing above the 200 period simple moving average. This is the golden cross and the potential trend reversal on the daily time frame. We saw the golden cross earlier. If we look at the last year, more or less the same time 1 year ago, what has happened here? There was a golden cross, then price failed to produce a new higher high, but then we had yet again a golden cross which suggested a downtrend. So even though the buyers could have entered at this high, there was a reversal sign, and you can see how fast and how strong the downtrend was. Maybe this will be the case again, maybe it will be a fast uptrend, but yet we need to see that the support will hold. And therefore, as long as this support holds, what I think is that the price will attempt to go higher. And there are several resistance areas to watch. The very first one is the previous level of resistance. It has been formed back in April, at the end of April, and then it was a resistance again, it was the resistance again. So very important resistance area, and we need to break above to move higher. So this is the closest resistance that we need to watch. Now the next one becomes 23.6 fips based yet again on this retracement, Fibonacci retracement. This is the second target that could be tested also within the week 2. It might either correspond to the ascending channel, which in fact hasn't been tested. You can see there is a ascending channel. It hasn't been tested or rejected, so there could be yet another move to do that. So maybe we will have a fast move towards 23.6 pips and then produce spike to test the channel, the upper trend line of the channel. And then if there will be a breakout, of course, the trend could continue. But all in all, I would consider these two levels, the nearest, are the most important. And we need to see either rejection of or the breakouts to confirm either a move to the downside or long-term uptrend. I think the long-term uptrend can only be confirmed upon the break above the 23.6. So we're looking at this kind of move, considering that currently it's trading at 0.6957. What I think, the price will correct down to retest the trend line, to retest the 50 moving average, and to retest previous supply demand area. So this could be the area near 50% fips at 0.6930. This is where buyers could be stepping in. If that will be the case, if this support area will get rejected, then we might see a fast growth or slow growth. In either case, this is the bullish trend. I think it's just a matter of how far it will correct to the downside. It can retest this support area, which is still the key support, and only break below this support might result in the price moving towards this low to produce a double bottom. And then if this low broken, then of course it most likely will become the downtrend. For now, very bearish considering the price action, higher highs and higher lows, trend line broken, moving averages broken, golden cross, resistance broken, channel hasn't been tested or rejected. So this means that the trend becoming very, very bullish. Let's see if there will be a correction. In fact, maybe there won't be. Maybe price will start or continue rising non-stop. So this is the view on the Canadian Swiss franc mid to long term, and maybe the opportunity for buyers will be presented this week, maybe tomorrow, maybe day after, but I think it should be soon. The more price will correct and still hold the support, the better the risk to reward will be for the buyers. This is on the Canadian Swiss franc. Let's move to the Canadian Japanese yen, which was the last analysis we made. And here we see the continuation of the uptrend, also bullish, so meaning that the Canadian dollar is strong. Maybe that's the Canadian dollar who is driving these pairs. In that case, also maybe we will see a correction before this rally continues. But as I said, it's a very bullish market for the Canadian Japanese yen. The worst case scenario, I think, move down quite a bit, retest the moving average, and then only going up. But what we see is daily break and close above the previously made high, so the correction might not be as strong. It could be retest of this support before and if price will continue moving up. So also very bullish for the Canadian Japanese yen, which has rejected this fib 61.8 as you can see, and broken the trend line, broken the previously made high. Although we need to consider that this high hasn't been broken, there was a clean rejection which might result in the corrective move down. Next one, Australian versus the dollar. This is a long expected the correction, which I think will be pretty strong. So it started, the next cycle will be at the end of this month. So this could be 1 month of the correction for the Australian dollar. Next one is pound Australian dollar. Well, this one is moving down, producing lower lows and lower highs. But in the long-term perspective, if I go to the daily time frame, this is our key support area. You can see that it has been rejected multiple times. I do think this support area should be holding, and for that we need to stay above this low. So daily close above this low is important. If we look at the daily on the cycles, we see that yet another cycle has started. Now, if there will be a close below the previously made low, then it should be a bearish cycle. If not, this could be a bullish cycle. For example, we might even see this candle becoming green today. That's quite a bit of move to the upside, although it is possible there could be this huge spike and then price will go up. So we need to see the daily close on the pound Australian. On the pound dollar, trend remains bullish. I think this correction just providing an opportunity. These are the three key support levels. We are rejecting the nearest support that we have talked previously. So this level is important. Let's see if it continues and move towards the bottom of the channel. So also possible that we will retest 131 before and if uptrend continues, but this is a bullish trend. I do expect at some point trend to continue. Correction is healthy considering that it was a pretty decent uptrend. So this correction may be consolidation before it goes up. Pound Swiss franc. Well, here we see the key support because this was previously the resistance. So I'm looking at the daily as well, same as the pound Australian dollar. What will be happening today with the daily close, whether it will break below the trend line and whether it will break below this area which was previously resistance and now it should be the support. So this will be important to watch for the pound Swiss franc. Pound New Zealand dollar, it rejected one of our resistance mentioned previously, so it has reached one of it, rejected, and it went down sharply. Now the next thing what might happen is consolidation near this support. For now, even on the 1 hour chart, we still haven't broken this low because you can see there was a spike, okay, and now we need to close below the spike to confirm the downtrend. We had this spike yet again, failed to close below, and this still validates this support. So maybe this will be the support trend line. Maybe there will be this move to the upside starting soon. Although we reached the resistance, then declined sharply. So need to definitely hold the support if the uptrend wants to continue. Pound Japanese yen, well, expected also corrective move to the downside. And yeah, it's a long-term bullish perspective. So we should see the second scenario where the correction took place, and maybe we will test this support and then only move to the upside. So quite healthy as well on the pound. But on the other hand, we need to consider that there was a double top produced. Now there could be a double bottom as well, so with the spikes below, maybe a retest of the 200 exponential moving average, which could be acting as the support. This low here is the most important to watch, especially the daily close below will invalidate the bullish forecast. The euro versus the dollar, we rejecting the trend line resistance. So yeah, it looks bearish, and we didn't test the 2250, 2260 resistance area confirmed by Fibonacci. So yeah, this could be this correction to the downside, which could be quite strong and sharp. But all in all, this is a long-term uptrend. So I think it's just a matter of how far it will retrace. And as you can see, based on our fibs and based on our cycles, it could be by the end of this month, same as we had on the Australian versus the dollar. So this could be that the dollar will be strong up until the end of the month. So if we go back to the Australian dollar, we can see the next cycle is 28th of December. Now on the euro dollar, this is also 28th of December. So this could be this correction up until the end of the month, and only then we will see an uptrend continuation. Looking bullish, but expect the correction. So yeah, these were all the analysis we had previously, including the today's one for the Canadian dollar against the Swiss franc, and I do hope you enjoyed it. Don't forget to click the like button and also subscribe to our channel to follow videos we do every day. And tomorrow, guys, I will see you yet with new analysis. Take care. Until then, profits to you.